Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we review the 6-month performances of two companies, West Indian Tobacco Company Limited and Trinidad Cement Limited. Now, while both operate in markedly different sectors, there have been some commonalities in terms of what are the drivers that have affected their performance, namely a slowdown in the economy of Trinidad and Tobago, as well as increased competitive pressures. Let's turn first to Witco. And for the 6-month period ended June 2017, Witco reported an earnings per share of just around $2.12, which is a 28% decline from the $2.96 per share recorded for the 6-month period ended 2016. Notable declines right across the board. The revenues, most importantly, declined around $106 million, or 20%, from $514 to $408 million, while gross profits also declined from $396 million to just about $307 million, corresponding period on period. Profit before tax also declined around 24% from $337 million to just around $256 million, while profits after tax, again a 28.6% decline from $249 million to $178.3 million. Witco did announce a second interim dividend of around $1.05 per share, taking its 6-month dividends for the year to $1.81. But this is still some 20% lower than the $2.26 per share in dividends that investors would have been able to receive in the prior period of 2016. What has been the most outstanding feature of this performance? Well, over the past 5 years, this graph shows revenues and profit before tax, statutory profit before tax, of Witco. And as we can see, there has been a consistently increasing trend for revenue growth in the blue columns, from $441 million for the 6-month period in 2013 to just around $514 million in the 6-month period for 2016. That has had a sharp change, and as we can see, we moved very quickly from $514 to $408 million in total revenues. And in fact, the 6-month profit before tax, as mentioned, fell from $337 million to just around $256 million in total. What could be accounting for this drastic movement? Well, as mentioned, the Trinidad and Tobago economy is in a recessionary period, and it continues to affect consumer demand. And as we can see, it would have impacted some of the revenue generating power of a company such as Witco. Other and equally important factors, the introduction or the continued presence of competition from illicit sources, the black market for tobacco products. And this could also be materially affecting Witco, particularly in an environment in which taxes on legal products have increased, and they were increased by the government recently. From an operating perspective, Witco continues to do reasonably well. The green column here shows its gross profit margins, and as we can see, gross profit margins have hovered between 75 to 77% for the past 4 years or thereabouts, and net profit margins, that is the profit after tax for every dollar in revenues generated, is still a healthy 44%. And historically, over the past 4 years, it has been between 44 to 49%. Trailing dividend payout ratio, that is the amount of dividends that the company would pay out for every dollar of earnings generated, has increased. And as we can see, as of the 6-month period ended June 2017, there has been a trailing dividend payout ratio of over 100%, which means that in the past 12 months, the company would have generated more earnings, would have paid out or declared more dividends than it has earned. So, at a price of just around $125.82, Witco is trading at a price to earnings ratio, as we can see here, of around 23.8 times, and still offers a relatively healthy dividend yield of 4.33%. Now, as you can see, in the last period of 2016, it was around 4.66%, and with declining earnings, if it persists, that dividend yield could come under some pressure should the price not adjust. So on the basis of a still reasonably attractive dividend yield, but tempered by a more challenging operating environment and increased competitive pressures, Bourse maintains a neutral rating on Witco. Let's move quickly to TCL, Trinidad Cement Limited. And for the 6-month period ended June 2017, TCL recorded an earnings per share of just around 1.2 cents, which is a very steep or 85 or 86% actually decline from the 8.5 cents recorded in the corresponding period for 2016. Again, some of the same characteristics as Witco. There was a decline in revenue of around 13.8%, as we can see, from $986 million in 2016 6 months to $850 million, and profit after taxes fell from $45 to just around $18 million. Restructuring costs, although declining sharply, could not offset a one-off increase in finance costs, and this led to the earnings per share figure that we see here reported. Now, what could be some of the drivers? Again, the country Trinidad and Tobago is in in a recessionary condition, and that has been reflected in local cement sales. And here we see that for the period January to June 2017 inclusive, sales of cement locally were just around 234,600 tons, which is about 13% lower than the 278,400 tons sold in the corresponding period of 2016, and roughly a 32% decline from the 347,000 or 348,000 tons in January to June 2015. Again, TCL is facing some increased competitive pressures like Witco from the newcomer in the market, that is rock hard cement, and it has forced TCL to adjust its prices sharply, and this has been sort of a double-edged sword with a decrease in volumes being sold locally as well. So on the basis of the current trading price, which leads to a price-to-earnings ratio of about 153 times, inconsistent dividend payouts, and again, challenging operating environments like Witco, Bourse maintains its sell rating on TCL. And here we can see finally, the earnings per share in half year 2015 was just about $1.03 per share, and our TCL's current earnings per share of just around 1 cent per share. That's it for this week's edition. For more information, feel free to give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.